CEOs and insiders, meanwhile, are cashing in their stocks at historic rates. From Elon Musk to Google co-founders, $63.5 billion have been sold through November. That's up 50% from last year. Joining me now, Rob Luna and Scott Martin. And, you know, Scott, I don't really get too frustrated when insiders sell unless they sell a large percentage of their stock. But for many, it's a problem. I mean, would you be buying? Tesla's made a 50-point reversal off the low today alone. Would you be a buyer if these insiders are selling?
Sometimes it's a good thing to do that. I mean, and here's the funny thing, Charles, that to your point about people getting so emotional and so wrapped up in what insiders are doing. Sometimes they're selling for different reasons than you're buying. I mean, they're selling for tax loss or tax gain type capture, as well as the fact that maybe they have personal situations that they're taking advantage of. Or, my goodness, as investors, sometimes they're selling because the stock is way up and they want to just take some chips off the table. So what I like to look at in the particular notion of Tesla is I like to buy Tesla on big down days, big washout days. We had one recently, Charles, earlier this week when the New York Times came out with that report about the self-driving technology. So, yes, I like Tesla long-term here. I think it's a great part of our future, but I want to wait for those big down days because those are short-lived. When Tesla pulls back hard, that's when you jump in and buy, and usually the next couple of days it's up.
Of course, Rob, one of the main reasons we're seeing all the selling this year, the new laws, the new tax hikes are coming, and a lot of these folks are cashing in stock just so that they can pay some of these tax obligations. So would you look at it on a company-by-company basis? When does it become a big deal?
Yeah, no, I completely agree with Scott, actually, surprisingly, Charles. You know, from the standpoint of, you know, these executives, look, they file something called a 10b5-1. Investors can look at that, and you could actually see that these sales a lot of times are predetermined. I work with a lot of corporate level executives. This is something we do just as risk management. When you think about it, Charles, that's where the majority of their income's coming from. So they have to go ahead and sell those stocks. But to your point, it is a case-by-case basis. Don't sell a stock or buy a stock just based off of what insider is doing. And to Scott's point, if you like these stocks when they get beat up for any reason, if the excuse du jour is the CEO is selling, go ahead and buy them then. But don't let this determine your investment strategy.
Yeah, and a quick note, there's apparently the AMC CEO sold 90% of his stock. I don't know. I'm not cool with that. The stock got hit. Is still under a lot of pressure. I'm really surprised he did that. I don't know. I think he may have taken advantage of investors on that one. Let me ask you guys about today's session because some folks are confused. Rob, I'll start with you. Does a day like today when we could have easily been off a whole lot more, but we're not, does that signal anything to you?
Yeah, I mean, I'm really surprised. Your previous guest, who's a technical analyst there, was kind of talking about this. The market's extremely resilient. We have so many opportunities and reasons to go down here, and now we're seeing all the predictions of a 20 to 25% pullback next year. What I've learned a long time ago in this market, Charles, is you want to go against consensus, and the obvious setup for next year is probably what you do not want to be doing. I think the market is strong. As long as the interest rates stay low, you got a 10-year still under 1.5. Inflation, as we saw this morning, is an issue. Cash is trash. You want to be invested in assets. Use these opportunities as a pullback. This market's going higher, in my opinion.
You know, Rob, let me start with you on this one, Scott. It is interesting to me, though. Yesterday, the best performing stocks were the most boring stocks, right? The S&P 1500, low volatility names. It's just, I mean, they're there, right? As the Pepsis of the world and the McDonald's of the world. I mean, is there a time when you say, okay, I want to park a little bit more money than normal and boring but steady?
Yes, and we've been doing that for our clients, Charles, but we don't stay there. I mean, these market phases are fast and furious, and then some days, like you mentioned, the staples are there. Other days, energy is there. Other days, utilities have been great. And then other days, tech, my goodness, which has been a great sector for us the last several years, is lit up like a Christmas tree that may or may not have been set on fire. And so you have to realize that there are times you need to have different things in your portfolio, doing different things at different times, and having those experiences over a long-term period is how you're going to win in this market and win as an investor.
I caught that, my man. The Christmas tree set on fire. You know, we're a little sensitive to those kind of analogies over here these days. That's all I'm saying. All right, I've got one for you. A spoiler alert for all you Sex and the City fans, and that's Rob and Scott. There was a big death on this reboot. A character was actually using a Peloton bike ahead of their demise. Now, the stock is down today, but it really probably isn't that. There was a massive downgrade on it. And, Scott, I think that the notion here is a lot of people were going for these stay-at-home stocks. And we were told even after the pandemic is over, the hybrid work thing is going to be there forever. 40% of us will work from home. And all of them, one by one, have been taken to the woodshed. Is there any hope for Peloton or any of these other names?
There is. I mean, I think some of these stocks, like you mentioned, Peloton, whether it's these documentaries or say these comedies or whatever you want to call that show, taking shots at Peloton, I think these stocks get overdone, Charles. I mean, you look at, Rob mentioned the technical analysis aspect of things. Look at the RSI. Look at the relative strength on Peloton. Look at the stochastics. Look at the MACD histogram. This is all really cool stuff in technical analysis land. They're way overdone. So as long as you have the ability to kind of ride the wave here, I think you got to get into Peloton here.
All right. Hey, here's the good news. There will be a vacancy for a main character if they make another movie. Rob, I checked you out on some of those honeymoon pictures, my man. You are perfect for the role. You could be the new Mr. Big any day. Both of you guys, Rob, Scott, have a great weekend. Yeah, maybe bigger. All right, folks, I love hearing from you on Twitter.